man, so Bitcoin is falling. FOMC minutes in just 7 hours. We've just had Fed Bullard share some remarks. Is this rally officially over? And are markets back to being worried about a recession and prolonged sticky inflation? We've got loads of dynamics in this market going on right now. And this year really has kicked off true to what we said in being hugely volatile with many false starts. But we need to look at this chart and go, hang on a second. What is going on? Are we being rational? Are we following the markets with a rational mind? Or are we just overreacting and panicking? And that's one of the things you want to avoid in crypto, is that panic. If you look at this, we've fallen out of this pattern. I'm sitting here on the hourly chart on Bitcoin, by the way, and you can see we fell out of this triangle pattern. You're seeing some good support coming in around this 23,900 mark, which is interesting because once you fell from this pattern, you look to the left and you see some support around 24,400. We didn't hold that. Then you have to look at the next point, which really brings you down to 23,500. It's trying to create a little bit of support in between. Now, if it does that, great. You need to start heading up and re-attempting back towards 25,000. If it can't, then I am looking for support at the bottom here at 23,500. And failing that, what do you then look at there? Well, you have to look at the move and where the move started. And you can argue two things. One, the move consolidated here for a couple of hours. So you could argue, will there be support at 22,600, 22,700? And thereafter, what you want to look at is down here, back down here at that 21,500 level. So that's what we're looking at. But I want to put something into perspective because everybody's panicking. But this is where we're at. This is where we're at on the daily chart. And when you look at it like that, is there any reason to panic? I mean, what everybody's talking about right now is yesterday, we were down 1.57%, guys. 1.57% down yesterday. And you would have felt it's the apocalypse. And this is a clue. This is a sign that tourists are starting to come back in the market. A few of the weaker hands are starting to come in the market who are looking for instant gratification. And if you're a long-term holder, or even if you're a short-term holder, you need to be patient and not get shaken out by these people, okay? Because you've had a 1.5% down day yesterday. That is nothing. And today you're setting up for a 1.3% down day, okay? NASDAQ yesterday had its worst day, okay? Its worst day, down 2.5% roughly. So it was a horrible day for the wider markets. I mean, we can go and check that, right? Let's take a look at the wider markets and see what happened. Because the US yesterday down 2.5% on the NASDAQ, S&P down 2%, and the Dow Jones, which is supposed to be the blue chips, the stables, down over 2%. So what do you expect from Bitcoin? Yes, we've had a couple of days of decoupling, but have we truly decoupled? No, you don't get a true decoupling until it's happened for a very long period of time, until you've seen it decouple for weeks and months, right? That's when you get a true decoupling. At the moment, it's just a temporary decoupling where Bitcoin said, we want to get through this 25K level. Now, the other thing we need to understand is the 25K level mark is a serious level. Do you think that bears were just going to roll over at this level and just let us run to 30? No. We've made no hidden remarks here that this is a critical level. How long have I been speaking about this level being a critical level? And you think we're just going to be able to go through here? Of course the bears have to step up. I will be shocked if the bears can't step up. But the critical battle is going to come down here at this pivot point. Okay, at this pivot point around that 21,400 mark, if the bears can go and form a lower low, if the bears can form that lower low beyond there, that is where the bears now back to meaning business. Right? Until then, we're good. We can create a higher low as long as we turn around before this pivot point. If we can turn around anywhere here and go post a higher high, break through 25, good, strong strength. Now look at this. We need to look at what Fed Bullard just said. Because the Fed Bullard gave some interesting remarks just now. And you got to remember, who is Fed Bullard, right? Fed Bullard is considered the biggest hawk. Let's continue to the site right here. And again, sorry guys, you know I'm traveling, so got to do it ad hoc here on the iPad, but I've got to give you the updates. I might look disheveled, not had a haircut, but I've got to give you the updates. Who cares about that? That's not why you're watching me. US economy is stronger than what we previously thought. He said we need to get inflation down in 2023. Well, duh. Silicon Valley layoffs have no bearing on the overall strength of the market. He still thinks we can get inflation down while maintaining a strong labor market. Now, this is very interesting because what we need to talk about, guys, is the FOMC minutes are in the next 7 hours. And a lot of people creating a lot of commotion around this. Remember, it's not a new FOMC meeting. It's the minutes from the previous one. Okay, and what we're looking for specifically, and I will read the report and make a video if there's anything major in there that I need to share with you guys. But what we're looking for is, were there any dissenting members? When they did the 25 basis points at the last meeting, were there members like Bullard or anybody else who were actually, it's more important to have voting members because Bullard doesn't actually vote. But were there any members who were saying, no, we need 50 basis points? And were they pushing that agenda? And here's why that's important. Because if they were doing that then, keeping in mind since that meeting, we received a miss on a CPI, a miss on a PPI, and on Friday we get the PCE inflation, which is the Fed's favorite form of inflation figure. Then we have to go, hang on, if they were doing that back then when the story was looking pretty rosy, what are they going to think now? And so far, that is what we're leading. That is what's causing some of this decline in the market, some of this pullback we're seeing in the market. It's that 20% you're looking at there. That 21% of the market has cropped up over the last week or so. We were monitoring it, it was very low. And now 21%, this is close to almost getting to 25, which is a quarter of the market, expecting 50 basis points. And what Fed Bullard has said is he also expects that. So he says, Fed Bullard that is, that he expects the terminal rate to get to 5.38%, which you can see there in the middle of the screen, 5.38%. That would suggest a range of 5.25 to 5.5%. So if we come back to here, in other words, what he is saying is he expects that however you want to shape it, right? He's talking about the terminal rate. It doesn't matter whether that's 50 now at this next meeting and then 25, but he expects 75 base points more rate hike roughly, right? Between 50 and 75. So if we're sitting here at the 4.75 lower band and he's expecting us to get into that 5.25 range, he expects at least another 25, at least another 25 thereafter, and potentially another 25 thereafter. And that's what the markets are now starting to price in. And if we go back to his remarks, let's take a look at exactly what he's saying. He says we have a good shot at beating inflation in 2023. The yield on the 2-year treasury, which is sensitive to Fed interest rates, is at its highest level in nearly 16 years. So the market's saying, oh, we're not sure, we think inflation is going to be sticky. And he says it kind of seemed like the US economy might be more resilient than markets, though let's say 6 to 8 weeks ago. So these are quite, soft remarks here from Bullard. Bullard is a staunch hawk. He's always saying do more. He said that from the outset. Do more, do more, do more. Big proponent of front-loading those rate hikes. So for him to say we have a good shot of beating inflation and we can keep the labor market high, that's a good sign. That's what Jerome Powell is saying. Now we want to see, does that change? So it's interesting that he said this today with the PPI data, with the CPI data. He's still showing confidence that we can see that. Now he also said that markets are overpricing a recession. Very interesting. I think markets have overpriced a recession in the second half of 2022 and overpriced a recession in the first half of 2023. And maybe they are overpricing the chance of a recession in the second half of 2023. In other words, is he saying, this is where it gets a little bit confusing, is he saying that there's unlikely to be a recession? Or is what he's really saying is that it's not that it's unlikely. Oh, can't move me back over there. Go back over there. Or is what he's saying that there's going to be a recession in 2024 instead? That's what we need to understand. Does he think we're going to have a soft landing, or are we just pricing it in at the wrong period, or pricing it in now versus in 2024? So that's what we got here in the markets, and ultimately we need to look at the charts and just remain a little bit calm. And so my game plan is to sit here, look at this chart and go, hang on, where are we right now? Let's bring out the daily EMA ribbon. Like, we're good, guys. On the daily EMA ribbon, we're extended from our EMA ribbon. If the bears wanted to have a couple of days, good for them. Come into your EMA ribbon, test it here at 22, see if we got some strength. Where I'll start to get worried is if we create a lower low. If we go below this period here and start losing our EMA ribbon, that is no bueno, right? That is not good, but we're still away from that. And if we do head to those levels, that's where I'll start looking for opportunities to DCA. I'd want to be looking for serious pullbacks. The last 2 days is not what I call a pullback, right? It is on a small time frame if you guys are trading on the very small time frames, but in terms of long-term investments, that's not a pullback. We're still in an upward trend. We still own our daily EMA ribbon. Now, here's where the fears start to come in a little bit more, and that is the weekly EMA ribbon. How long have I been speaking about this for, guys? Ever since this rally started, I pointed to this as my beacon, my light that I want to look at. And so far, what have we seen? Big run into our EMA ribbon. Okay, nice run into our EMA ribbon, fantastic. 2 weeks of the bears pushing us back down. Huge bullish engulfing candle, which by the way you can learn. Ijazda UK/TA. If you don't know what these candles are, EMA ribbon, this is all gibberish to you. Learn it. It'll take you a couple of hours, completely free. I'm not charging thousands of dollars for my course. I put it for free. Okay, so you look at this then, and now we start opening up a red week. And is that a big deal? Well, it could be. But more importantly, I want to see the volume from the bears. Let's see how strong the bears are this week. We just last week had an 11% week. So if the bears have a 2% negative week, or a 3%, or a 4% or 5% negative week, is it really the end of the world? No. We need to see what do they have in store, because I expect something. And what I don't want to see is this, right? Obviously, when we last got rejected from these levels, it was a big 11% down week followed by another 9% down week. That is what you call a pullback, right? In fact, that's quite horrible, right? But what we're seeing so far is not that. So we look to the FOMC minutes. Let's see if there are any clues in there. But so far, with Fed Bullard and what the Fed is saying, they seem on track. And it's quite odd that they're flipping like that, and especially a hawk like Bullard to come out and say, you know what, I think inflation can come down throughout this year. I think we can keep the job markets quite healthy. And he's not saying things like we're going to have to slam ourselves into recession or we need to do a lot more and Jerome Powell's not doing enough. Very interesting, very interesting. Now, will that change? We do get PCE inflation at the end of this week. That's important for the Fed. We will be looking to that as well. But overall right now, I'm calm. I'm not chasing green candles. I'm staying patient. I expect this. I always said it. Q1, Q2, volatile. Lots of false starts, and it does not help. I mean, this market's bipolar right now, right? It's really tricky to predict. And it doesn't help that on top of that, you've now got a cream of retail investors, because you can see that from the Fear and Greed Index, that are starting to come back into the market looking for a quick buck, because everybody's talking, including us, about this big move that can happen once we clear 25,000. So everybody wants that. Everybody wants to be in Bitcoin as it goes to 30,000 and beyond, because they don't want to miss the rocket ship, right? But guess what that happens? That then gives you lots more false starts, because more people are leveraging, more people are long, and that creates big liquidation candles to the downside. So you don't want to get caught out. And that's why I don't bother trying to time this market. I'm in the market, I'm enjoying the market, I'm not chasing green candles. When I see pullbacks, I'm going to add slowly and methodically. And that's how I'm playing it. Let me know in the comments, how are you guys playing it? Let me know what are your thoughts on this market. It's a very tricky market we're navigating right now. And not just tricky for us, tricky for all the politicians, tricky for the Fed. This is not an easy situation to get through, trying to navigate this soft landing in very tricky situations. But if we can do it, we can get out of here without that intrinsic inflation, then crypto will be setting itself up nicely. So I continue to expect the rest, this year and well into Q3, Q4 to be opportunities to accumulate. That's how I'm treating this year. I'm not FOMOing in. I'm not trying to, go all in and ape. No, just trying to get my cash right and trying to accumulate as much as possible to get ready for the next move. If you look at the previous cycles, the next bull run just doesn't happen overnight. It gets closer and closer leading up to the halving, and then you start to see a fake up, comes back down again, shakes people out again, and then it goes for its bull run. And that is what we're looking for. Hope you guys enjoyed. Don't forget to smash up likes. Don't forget to subscribe. As always, check out the links in the description. And I'll see you in the next one.